What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so don't miss future videos. So I have two real estate investment trusts that I'm buying. These are two new kids on the block. They are high yield dividend stocks. I'll do a stock analysis and review on them. And I'm going to explain to you why I am long in these dividend stocks, especially these real estate investment trusts. They are so diversified, and I want to capitalize in certain areas with real estate investment trusts. Like I have medical ones, I have industrial ones, I have, net lease ones, I have ones like I have health LTC and all these, but these two are very unique. And I'm going to explain to you guys why I own these stocks. So if you're new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check these two REITs out right now. The first one I want to go over is AFCG as a symbol, AFC Gamma. Now the dividend yield is high at 13.39%. The PE ratio is 9.61. The average volume is 185.27K. Market cap is 330.30 million US dollars. Year range is 1490 to 2550. Day range is 1622 to 1708, and its previous close was 1590. So I have done a previous video on these guys, but I'm going to tell you guys in depth at the end why I like this one and the other dividend stock, which I'll reveal to you. So they're the leading provider of institutional loans to high-quality Mary Jane operators nationwide in all aspects of production, cultivation, processing, and distribution. We offer loans and related facilities, generally secured by substantial assets such as real estate licenses and cash flow. With years of combined lending expertise and real estate experience, AFC Gamma's principles are now focused on the exponential growth of the cannabis industry. Hopefully I don't get in trouble. So here's the thing. This is what they say with their advantages. So they're a real estate investment trust, which gives investors access to income-generating commercial real estate investments. So they're an mREIT. Not only is a real estate vehicle appropriate for a real estate lender, but a REIT offers investors several benefits. It's income-oriented, with the REIT participants eligible for a steady stream of distributions. And since REITs earn their tax exemption by distributing at least 90% of their income to shareholders quarterly and 20% of qualified business income deduction, REITs can typically generate more higher yielding, it says in parentheses, taxable cash flow to their investors. So here's the thing with these guys. We're going to go over revenue-wise, which makes these guys very exciting. But I'm going to go a little bit more into these guys. So they describe cannabis production has become a growth enterprise. Cannabis is now legal for medicinal use in 36 states and DC, or medicinal and recreational use in 18 states and DC in 2017. Survey reported that almost 55 million Americans said they had used the Mary Jane at least once or twice over the prior year, and it's become a big business. Legal spending on Mary Jane is estimated to reach above $20 billion in 2021. The landscape will almost surely become even more favorable for the Mary Jane in the years ahead, which provides for the opportunity for both participants and investors. Further, because access to capital is constrained for cannabis companies and the universe of cannabis lenders is highly fragmented, we believe the opportunity for a sophisticated institutional lender is even greater. Here we go. And they're just discussing the statistics. So 74% of the U.S. population lives in a state where the Mary Jane is legalized. Now look at their approach. So origination, okay, they maintain a direct organization platform aimed at creating enhanced yields that allows them to put in greater controls by originating and structuring loans. Platform drives increased deal flow, which provides for improved selectivity. So they screen for potential deals based on the 4 criteria: company financial strength, the in-state environment for the Mary Jane, regulatory considerations, and the property value metrics. Other tools they use include, but are not limited to, appraisals, quality of earnings, environmental reports, site visits, AML compliance, comparable analysis, and background searches. Strength or weakness in any of these areas can spell success or failure for a loan. So they do their homework. And then here's the thing. Before they commit to funding, their investment committee focuses on managing credit risk via comprehensive review process. Unanimous approval from the credit committee is required for each loan before the commitment papers are issued. Their investment team works alongside external counsel to negotiate loan documents with an emphasis on financial covenants and limitation of actions that may be adverse to lenders. Once the loan is funded, they monitor the company's performance over its life. Now, let's check their revenue. So, since these guys are kind of a new real estate investment trust, their revenue has increased exponentially. So, in millions US dollars, okay, this is $5.25 in 2020, and then 2021, 37.014. So, things are jumping up. Okay, the yield's high. That's kind of a given because they're a new kid on the block. But revenue-wise, they're looking very strong. Now, this is a very big risk with these guys, but I'm willing to take the risk with these guys because I see this as diversity with my real estate investment trust portfolio. And I see kind of a little branch to focus on as well because I have medical REITs. I have kind of gaming and leisure REITs like VC, EPR properties. I have industrial stag. I have O, obviously, which is a really good real estate investment trust. Agree Realty Corporation, AGNC Stock. So I have some diversity. Now I'm going after Mary Jane. Okay. Now I did have IIPR. I'll probably add innovative industrial properties. I need to think how I'm going to do this with these guys because I like these guys as a high yield dividend stock. And these guys fit my criteria that I'm looking for. Are they in demand? Absolutely. They're giving out loans and everything. So the revenue is going up. And I'll even show you a little bit more details with their revenue. So September 2021, the revenue was 9.96 million. It was way up. Net income was way up. Net profit margin, okay, a little bit down, big deal. December 2021, revenue went way up, 11.69 million. Net income, look at that. Net profit margin, operating income. March 2022, revenue has gone up significantly, 16.03 in quarterly. This is million. Net income goes up. Net profit margin up. Operating income up. I'm not too worried about net change in cash because these guys are new. So this is a risk, but I'm willing to pay that price with these guys. And I'm going to show you their dividend history. These guys are so new as a dividend stock. It's really hard to go on Zacks. I really like the trends that Zacks discusses with dividend stocks. So I'm on NASDAQ.com. So 6/14/2021, it was 38 cents. 9/29/2021, 43 cents. 12/30/2021, 50 cents. And then it hit March at 55 cents. And then June, it hit 56 cents. The dividend yield is high. Now, this is a risk, okay? Annual dividend is $2.20. So if you bought one share, you made that amount. Again, this is a major risk. But I did tell you these guys are new. So this can happen with new dividend stocks, especially real estate investment trusts. But again, 90% of what they make go back to us, or else they get penalized. They literally said that on their website. So I'm going to take the risk with these guys. I have them on my M1 Finance dividend portfolio. And this is my 3-year anniversary with my M1 Finance dividend portfolio. And I cannot wait to show you guys the new dividend stock that I bought. And I absolutely love this one. Let's check that out. We have another mortgage-backed real estate investment trust called Chicago Atlantic Real Estate Finance Incorporated. REFI is a symbol. Dividend yield is 11.70%. Average volume 73.30K. Market cap $283.76 million US dollars. G range is 1478 to 2029. Day range is 1596 to 1695. And its previous close was 1614. What do I like about these guys? So this is what I like about these guys. Again, symbol REFI. Chicago Atlantic Real Estate Finance is a commercial real estate finance company that manages a diversified portfolio of real estate credit investments, primarily in the Mary Jane space, and is actively investing across the value chain. The company is led by a senior management team with extensive experience in real estate credit, direct lending, risk management, and real estate acquisitions and development. Demand for financing in the Mary Jane market is expected to continue to rise due to recent and future state legalization of cannabis for recreational and medical use, as increased consumer adoption, with both trends requiring significant capital expenditures by operators. So there we go. Let's look a little bit more. So let's start in June. The revenue was 1.14 million. Net income 1.07 million. Net profit margin 93.92%. December 2021, 9.21 million. Net income 7.53 million. Net profit margin 81.67, operating income 7.53 million. Next, 9.71 million in March 2022. The net income is 7.8 million. Net profit margin 80.37. Operating income 7.8 million. Net change in cash negative 74.17 million. I'm not too concerned the net change in cash because these guys are so new. Now I'm going to go over their dividend history real quick. So these guys are new again. Okay, now these two are risks. So starting in December 31st, the dividend was 26 cents. And then March, it was 40 cents. And then June, it was 47 cents. So we have to be very careful with this. I'm going to be very careful. I'm going to put some money in these guys, kind of as play money like I did with Innovative Industrial Properties, which I did get a profit and sold it. But IVR, that was some of my play money. I bought the dip, and then all of a sudden they did that reverse stock split. So it was reduced. You basically divided by 10. And they were in damage control, or else they would be delisted. But these guys, okay, these guys in Gamma have a lot of potential because they're so diversified. So people are asking for loans, they're giving it out, and they're generating a profit. So that's one thing that I like about these two dividend stocks. These are my risk stocks. So let me know what you think of this video. If you are new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. This is Dark Dividend. You guys have a good one.